Luck is when preparation meets opportunity. And in the world of trading, you don't get lucky. You create your own luck by preparing and striking hard when the opportunity comes. Hello, traders. Welcome back to Your Nifty Guy. In today's video, we'll review how the market moved compared to our plan and then build a clear strategy for tomorrow so that you can stay ahead of the market. If you find value in these videos, don't forget to like it, share it with your trading community, subscribe to the channel if you haven't already, and share your thoughts in the comments below. On that note, let's get straight to the charts. And as usual, the video will be divided into two parts. In the first part, we will be discussing about today's move versus what we had planned yesterday. And in the second part, we will be planning the strategy for tomorrow. All right, guys, so let's get going. Total, I took a total of two trades today, and I'll break down each of them separately for you. And that is the reason why I started with the particular quote, as in you don't get lucky in trading. All you need to do is prepare and then be ready when the opportunity strikes. Now, if you can see clearly, if you haven't watched the last week's video, please go and watch it. This is what I had clearly and marked on my chart. This is the weekly fib resistance level, and this was a level which was derived from the weekly charts. And of course, it will act as we expect some reaction around it. And how we play around the reaction is what we need to see. So the markets actually opened with a big gap up, 300 plus points of a gap up based on the announcement by our Prime Minister, Mr. Narendra Modi, about some GST relaxation, as well as the meeting between Trump and Putin, which went again. There was nothing negative which came out of the meeting, so that's a big positive. And of course, the surprise element was the GST announcement which came in. So on the back of that, markets opened with a huge gap up. Once markets opened with a huge gap up, now again, I was not expecting these levels to be touched so very quickly. Of course, we closed around 24,600 odd levels, and I was not expecting around 400 points move in a single day. But then again, of course, we opened with a big major gap up. Now, how do we play this gap up? Now, we already know that a big part of the profit already goes away when once the market opens with a big gap up or a big gap down. In that case, what happens is people who had carried overnight shorts or longs, they end up in big profits, and then market usually is sideways. So if you overall look at the market, this is the first, will take first 15 minutes. So this is the first 15 minutes high. This is the first 15 minutes low, barring this price action here and this price action here. The market was completely inside that range. But again, because we opened with a big gap up, we immediately started moving upward towards our resistance level. Now, as you can see, the market met our levels and we immediately came for a down move. Now, where exactly are we supposed to play this particular down move? Now, what I clearly mean about trading a reversal is once price action comes around here, you see the first reaction. Do you sell into the first reaction? Of course not. What I would have wanted was a equal high, slightly close to this high, but then again, or maybe a higher high, and then the markets to break this particular low. That would have been a good high probable trade for me at these levels. Now, see, no matter what, I do not let go of my setup and I follow my setup to the T. Markets did come to a very important resistance level. And of course, as you can see from this high till this low, the markets moved 170 odd points, right? It's a big move. But do we sell immediately as soon as we get here? Of course not. After a 300 plus gap up, if the market is continuing up, there is strength in the market. And we cannot immediately sell it. We need a proper price action to be able to short the markets around these levels. Now, that did not happen. Now, I always speak about price action or the market structure. So pay close attention. This is going to be important. Take lessons, take notes if you want. Now, I don't usually draw these price action charts patterns in the live market. Try to understand after markets reached here, there was a slow and steady movement on the downside, right? There was no major pullback which could have given us a clean entry, right? Nothing that could have happened around. It was a slowly on a 5 minutes time frame, the structure changed to a lower high, lower low, which is a bearish formation. Now, around here, if you observe, this particular low was not breached and a higher high was created, which meant the market is taking liquidity. And then this low becomes important for us. And once after again a lower high, markets breach this low. Try to understand why I did not short the markets at any of these levels is because I could not get a significant amount of pullback or uh, liquidity which the market had taken before going down. And that was the reason you can see around these levels. Go and observe the put option prices for today. Uh, I was watching the 25,100 put. So go and watch the puts price action in on the premium chart. You will see the movement also was slow and sluggish. And as an option buyer, that is something we cannot take a risk with. And that was the reason why either we wanted some form of liquidity, some form of internal structure change, and then this important low gets taken out, or we would have wanted a good enough pullback so that we could have shorted the markets. So again, this low became important, and this is where I entered into the puts. And as you can see, immediately we got a good buying. Now, I exited on this particular candle. The reason the markets went back below the day's low, right? The markets went below the day's low, gave us a closing, but a follow through did not come. And I exited as soon as this candle had closed around here for a very, very simple reason. Is that there could be buying which could be seen and observed from the bottoms, right? Markets closed below the day's low. Try to understand a day's low, which is important level. This was the day's low at the start of the day, the first 5 minutes candle low. Markets gave us a closing below it. Had it continued, of course, I would have trailed my position. But markets did go down, came back, closed near the highs of this particular candle. This is the reason why I always tell you guys to try to speak and talk to the market what exactly is happening. Now, as far as I can see, there was liquidity being taken around here. Overall sentiments in the markets were positive because of the major gap up, and then the markets actually going up and slowly and sluggishly coming down. So as soon as this bullish candle had formed, I decided to take an exit from this particular candle, from this particular short trade that I had. It was a good enough trade. I do not regret not entering earlier, but then again, following my system. And after only this liquidity was taken above this particular swing high, this low became important for me. And once this low was taken, obviously the trade was on. And this was the exit candle for me. Now, the second trade for me was a long trade, which I took at the break of this particular swing. Now, anybody who is questioning why was this trade taken, my request would be to go and watch the video on reversal setup. So there's a video which I had uploaded recently on the channel, which the title of it is the only reversal setup that you need in the markets. Please go and watch that. What we need is a single direction trend and then a double bottom on the charts. And if this particular low does not breach this low, much better. But apart from that, the fact that this particular double bottom is forming around the day's low makes it even more better, because this means the liquidity, the markets have simply taken liquidity around here, people who would have been short around here. But then again, do we immediately enter the trade? No, of course not. We wait for the markets to give us the pullback, and then once the high is taken out, we would have traded. I wanted a similar structure around here. Try to understand if you can just simply uh, make a mirror image of this particular pattern and place it over here. This is what I had wanted over here. I would have very gladly shorted the markets around these levels. But then this is something which formed around here and which is around days low. This was a liquidity grab by the market. Once markets moved up, gave us another dip, last attempt by the sellers. This high went out. All these people who would have shorted around here, their stop losses would be triggering, leading to a scalping opportunity on the long side. And this is why I entered here. Another reason I always tell you guys, uh, if you are a follower of my channel, you would have heard it. If not, I'll be repeating it again. In case of any gap ups or gap down, if the market is going ahead and trying to make an attempt to fill the gap but fails, that is known as a pivot gap explosion. or explosion pivot gap. The name does not matter. Try to understand the psychology. Markets tried to fill the gap but failed, and buying pressure came in, which means the markets can go up from here. And this was a beautiful scalp on the upside around here. Based on my trailing setup, the exit was on this particular candle. This candle fulfilled all the conditions I look for in a trailing stop loss hit conditions, which is the high is lower than the previous high, the low is lower than the previous low, as well as the candle closed below the prior candle's low. So this is the simple criteria or setup that I follow for exiting or trailing a long trade which I have. So this is the candle where I exited. So in all, two trades and two of them very good, very beautiful trades. Again, this is what I mean by when preparation meets hard opportunities, you create your own luck. So I hope the trades were clear and simple. Although once I saw the big gap up in the market, I did not think that okay, we'll be getting a lot of trading opportunities because I had expected the market to be sideways. Sideways. Even though the market was sideways in a bigger range. And that was the reason we could get two trades, one on the short side, one on the long side. And that is why I always say do not predict anything, but be prepared for anything. Just try to talk to the price, what exactly is the price implying, and go for it. So I hope the two trades that I had taken are extremely clear. Now for tomorrow, again, of course, this low, this high, this particular zone which is there is still be of relevance to us. And if we can see, we opened with a big gap up, but we could not obviously sustain near the highs. We have closed near the lows. So that will help us in tomorrow's trading. We don't need this. We don't need this. Now we are again, of course, also above the parallel channel in which we were stuck since a very long time. So that is another point to be taken care of. Now for tomorrow, I will keep the trade plan very, very simple. Number one trade, the rarest of rare trades. Market opens flat, gives us a closing below this particular low, which is today's low. And then the high of this candle gets taken out. We get a scalp on the long side. All right. Above this particular swing, we are above this particular high as well. We will be planning a long trade. Of course, we will be cautious with the price action around these levels. Of course, needless to say, above day's high, we will again be planning a long trade. Again, below this, if we do not see the price action that we are aiming for with the rare trade, if with a pullback, we can again create a short in the market. We can see a gap filling trade and post the gap filling again. Let the market decide. We'll not be predicting anything, but post the gap filling, we'll see what price action holds, and again we'll be taking it ahead from there. But for tomorrow, my plan of action will be extremely, extremely simple. We will be looking for a long trade. Above this, we can also take a quick entry, early entry, depending on the opening. In case if we open very flat and inside this particular triangle consolidation range, as soon as we break out of this triangle and we get a pullback, we can look for a long trade at this particular level as well. I will be quickly drawing a small, right? Above this is a lot of the trade. Again, do not get confused with multiple scenarios because these are all dependent on the kind of opening that we get and how the markets is reacting around these levels. So it is our duty to be prepared and not be surprised by what the market is doing. So yeah, that's it from my side for today. I hope you guys had a good weekend and trade with clarity, trade with preparedness tomorrow. And I will see you guys again tomorrow, post the market. And thanks for tuning in. Cheers.